This is The Roadmap with Ted Jenkin.
Hey everybody, this is Ted Jenkin and welcome to another episode of The Roadmap exclusively here on America's Small Business Network. Every single week I try to bring you some of the brightest and best CEOs, business owners, and entrepreneurs all around the country. And what do we talk about on here? We talk about how to start a business, how to scale a business, and maybe you too can exit stage left one day and sell that business for a lot of money. You never know. Big capital out there today. I'm excited today to have Spencer Thomas on. He's the CEO of Sweet Clover Lane. And this is kind of an interesting business. So I would love you to just tell people first, like, you didn't always do this. So what inspired you to actually open up the business?
Sure. So my background is in finance and real estate, right? And one of my friends approached me and said, hey, Spence, we see you do a lot in real estate. My husband and I, we also want to get into real estate. Can you help us? And so I created this format that we used to base the company off of just to help her and her husband. And after we closed on a couple of apartments for them, she gave me a call one day, said, hey, I really think we can make a business out of this. My husband and I really enjoyed it, worked well. It was a win-win for everybody. And so I said, I agree. But, with everything else I've been doing, I don't have a lot of time and capacity to start another company. And so she said, well, I'll handle all the administrative type stuff and everything else. And you handle, what you did on our relationship. So that's how it came to fruition.
You see these guys like Grant Cardone on Instagram all the time. And it's just like real estate, the easiest way to make money. I mean, you can make money in real estate, right? But it's not for everybody, is it? What kind of mentality do you have to even want to get into real estate?
You have to be okay with risk, right? First of all, you have to understand there's going to be ups and downs. You have to understand you're going to make mistakes and be okay with that.
Right.
But when I was a private banker, I realized about 90% of my clients made their wealth through real estate. And
right.
I learned from them. I learned some, what they did to get to where they were at, and was able to take that and use it for myself.
And that's how you built out this model. So, so essentially, as I was looking at the business on here, do you actually charge a fee to help people figure out how to set up the construct of buying a rental property? Are you part of the rental property? What does the business model look like?
Sure. So there's a couple different ways people can work with us. The way it works, depends on the person, right? So everyone has a different level of knowledge when they come to me, to us, I should say, when it comes to real estate.
Right.
And so when they come to me, they'll usually say, all right, Spence, I have, let's say, $50,000 that I'd like to do something with. Say, okay, with that $50,000, we're going to ask you a few questions. We're going to understand your situation. What are your risk tolerances? Sort of like when I was a private banker and I had my licenses, kind of a similar process to understand that I'm not going to take you and put you in a super uncomfortable situation where you're not going to be able to sleep at night.
Right.
Where, my biggest thing is I tell people is whatever decisions we make together or individually, the most important thing is that you'll be able to sleep at night, right? Because life's too short. And so what I tell them is like, my level of risk and what I'm willing to do is going to be much different than yours. So let's take a minute and understand where you're at and where you want to be, is how we first get started.
And if somebody's buying real estate, are you looking for rental properties that will ultimately cash flow for them? Is that the operative idea, or is it to have somebody else pay off the mortgage over time? How do you describe that with the clients that you work with?
Sure. So first off, our target return is 16% cash on cash return that we aim for. And so I don't factor in appreciation in that number. I don't factor in an exit strategy or anything like that, or tax benefits. It's really just mailbox money, as we call it in the industry. So if you put in, let's say to make a whole transaction happen, $100,000, my focus is that full $100,000, including closing costs, whatever we had to pay out of pocket, form the LLCs, whatever the case may be. I want to make money on what you spent, right? So either that money is in equity or is used to close the deal. We're going to target that 16% cash on cash return on the full amount that you had to put out of pocket.
So to do that, you really, you got to find great properties at a great value, right? But you also need to find consistent renters. Do you help people on the other side of that to find the renters? I see all these things on TV, horror stories of squatters that are in these properties, and the state rules seem to be all over the place.
Yep. So part of what we do in working with our clients is on the first level, if they say, hey, I really just want you to help me find the deal, underwrite it as an investor, negotiate it with the agents, get it under contract, help me form the LLC, like from start to finish, all the way to through closing, we can do that. And we have a consulting fee that they pay us once the contract's assigned to them. But if they say, hey, you know what? I want you to help me as an owner, right? I don't want to have to manage it by myself or manage the property owner by myself or whatever the asset is. And so we say, okay, we'll help you do that. And in return, we're going to get 10% of the net profit that asset makes. And so, yeah, we'll help them work with the property manager. We'll help identify, GCs if there's work that needs to be done on the property, just as we would if it was our own asset. We're going to do everything for that owner.
Right, because everyone thinks it's going to be easy. I'm going to find this house. I'm going to fix it up myself, and then I'm going to flip it because I saw flip or flop on TV. But it isn't that easy, right?
It is not. For me as an investor, one of the most important things to decide whether I'm going to invest in a market is, do I have a local team that can support that asset or that investment or whatever we're going to be doing.
And how do you curate that local team? When you buy that, you mean sort of the general contractors, the plumbers, the roofers, all those kinds of people that will do the work on the property, right?
Yeah, so if it's in a market that I'm not already in and don't already have a team established, luckily in the real estate world, there's a lot of people that are willing to help. So usually if I'll identify a market that I want to go into, what I'll do is I'll call people that are already investing in that market that I know. Because with the technology, and that's the beauty of where we're at today, there's a lot of technology that makes it easy to figure out how many investors are playing in that market, at what level are they playing, and do I know any of them? And so if I identify a market that I want to go into, what I'll do is I'll reach out to people that I know in that market or that are playing in it and say, hey, who are you using? Because we're very open. If you call me and say, hey, Spence, who are you using in this city? I'll tell you.
And are you doing all single family homes, or is it also multifamily, but all residential, if you will?
Yeah, it's multifamily, residential. So we buy single family units all the way up to, apartment complexes. I don't play in the hospitality space at this point. The markets will fluctuate. So right now it's almost impossible to get debt on hospitality. And hospitality is like another full-time job, right? Trying to run a hotel. So that's, no thank you. But yeah, so the majority of our assets right now are multifamily, but in the past we've had mobile home parks, we've had storage facilities.
Do you think it's hotter now because this next generation of Gen Z, they talk about how hard it's going to be for them to own a home, and that some people literally will be lifetime renters? Do you think that that's going to be the case?
It depends on the market, right? So with the lack of housing that we have across the country, right, that helps to have additional tenants. With the interest rates being high, that also helps from being a landlord. But it varies per market. So one of the markets we're in particularly, they're building a battery plant in one of the towns just north of it. That town does not have the infrastructure to support the 3,000 jobs from a housing perspective. So we know that the surrounding cities are going to grow because of it. So we look into the data per the area to determine, can we expect rents to continue to increase or decrease, or is it coming out of gentrification, or what are the data points?
I think I read an article this morning before we did this interview that home prices or home sales had dropped to like a 16-month low. Is that just a function of interest rates just being higher and people waiting or hoping that the Fed's going to cut interest rates?
In my opinion, yes. I believe it has, the rates are a major factor in that.
Meaning there's such a difference, Spence, that when people say, oh, I see a rate at 7%, that psychologically, if 7 went to 6, it would move that much, or 6.5 went to 5.5.
Yeah.
I mean, we're never going to see the 3% days unless we have COVID again, right? People are out of their mind thinking that's going to happen.
Yeah.
And 5% is kind of a hell of a rate to have for long. That's a pretty good cost of borrowing, right?
Yeah, but it's funny when you look at, so as an example, let's say like a $400,000 house purchase, the difference between a 7.5 and a 6.5 is considerable on a monthly payment. You're talking, a couple $100 a month at a minimum. And so that's where you have these borrowers that they want to live in these areas where these houses are $400,000, $500,000, $600,000, because housing may have slowed down from a sale perspective, but not from a value perspective, right? The house prices are still holding steady. In fact, I just got another tax bill that they're increasing my property taxes.
Right.
And so what the borrowers are finding is the markets that they want to live in, they can't afford because of the interest rates. And so they're waiting, they're renting. And in some markets, if you run the numbers, you're going to pay less to rent than you would pay interest on the mortgage if you tried to buy the same house.
Because we're a business show, I've owned and sold multiple businesses myself, but I've always been a fan, provided your growth isn't too fast, of having owner-occupied real estate. Mm-hmm. And even though it might be commercial, there are a lot of towns, like you may be looking at residentially, we see this here in Atlanta, that you can buy a home and convert it and make it a business. Do you like the idea of owner-occupied real estate?
I do, yeah, if there's a need for it, absolutely. Right. It all depends on the numbers, though. For me, I'm a very data-driven kind of guy. Right. I have a master's in business analytics, so I'm going to review the data, and if the numbers tell me what that makes sense, then that's what we're going to do.
Yeah, I think it's just another way owners could potentially build wealth. And there are some business models that are set up where the operating model doesn't really make any money, but it's really a real estate play. That people buy the real estate, they're like, if the business breaks even, I got $50 million of real estate. But I agree with you that what most people probably watching this program don't realize is that the real wealth in America is not built in the stock market. The two places it's built is in real estate and built in business ownership. And often people that are very successful in real estate, they're in the business of real estate, if you will. But you agree, right? Those are the two places that people make money.
Yeah, like I said, when I was a private banker for over a decade, over 90% of the clients made their wealth through real estate, either being real estate business owners in that area or just buying commercial, residential.
How much money does somebody need to have that may be watching to say, because you hear so many varied things, and I feel like social media is a detriment to people because they're like, hey, if you only have $5,000, you could build an empire. How much money do you really need legitimately? Because you're right, there is risk to start to build your own passive real estate portfolio.
So for me, and what I've always told my clients is before you really play with your money, make sure you have about 6 months of reserves set ahead, in your savings, just as a backup in case things go south. But if you're talking about, all right, if I want to be an owner of real estate, not like a wholesaler or whatever the case may be, I'd say a good number is anywhere, depending on the market, 25 to 50,000.
25 to 50 grand, you can probably get your first property, and then you can get started from there.
Absolutely. We took down a property with another gentleman. He came out of pocket $19,000 for the whole deal.
With the laws that are what recently got passed in terms of real estate agents, do you think the whole real estate model, and there have been companies that have tried to disrupt a little bit, like Redfin and things like that, but Open Door. But do you think the model will really change now that the whole seller buyer agent situation is different?
I think there's a potential it could. I think in the interim, it's going to remain fairly the same. However, we're going to see more disclosures, right? Just like it changed in the lending industry where, now all lenders are required to basically to provide the same loan estimate across the board.
Right.
So I think we're going to see something to that effect. But I've already experienced it in some of my transactions where the agent I was working with on the buy side said, hey, the selling agent isn't willing to give me a commission on this, so I'm going to need you to pay me, a percentage for this transaction.
Did you get a real estate license in this business? Is it better for you, or you're providing the analytics, the business model, and everything, but you don't sell real estate?
I do not. Nope.
So you find good agents over time that you can work with that can find properties, sell properties, and costs are reasonable.
So sometimes we'll have a buyer's agent on a transaction, sometimes we won't. Sometimes I'll find a deal off market. What I don't have a specific, let's say agents across the country. What I have are connections. I call them bird dogs in the hunting world. But what they'll do is they'll say, hey, Spence, here's a property I think you'll like, or here's a group of properties. Because the thing I've always told people is, send me what you got. I'll analyze it. And I have an initial sniff test calculator that I've designed that if it passes that, then I'll do a further underwrite. But as far as do I always use an agent? No. Sometimes I'll just work directly with the seller's agent. Sometimes there's no agent involved. I'm working directly with the owner.
How do you tell your clients when, or how do you know when's the right time to sell? Does the data tell you that as well?
The data, yes. The data will always tell. You just have to make sure you're looking at the right data, right?
So even though you shoot for 16% cash on cash return, you may also say, listen, we've hit enough appreciation that it's time to exit this and use the tax code to your advantage to figure out how to minimize your taxes.
Absolutely. And so one of the things I'll look at is I'll always analyze our assets to determine is our money still working for us at the highest and efficient use. And so sometimes, like for instance, the other day, one of our agents called and said, hey, you have this property, I think I can get a buyer that'll give you this much money for it.
Right.
So around the numbers, I said, yeah, it's worth it for us to just sell that now rather than finish what we were planning on doing with it, right? The numbers told us. And so knowing how to analyze the data, right, for existing assets is crucial. This is where I think it burns a lot of people and even a lot of existing property owners where they will have a portfolio of real estate and not determine what's their current cash on cash return. Right, they're like, oh, and this was that couple that I started with originally. They were going to buy a condo, right, for $200,000 cash, and their return was going to be about 4% when I ran the numbers. The 2 apartment buildings we purchased are going to now return them before any tax benefits or appreciation around 42% cash on cash return.
Huge difference.
So huge difference. So, but the thing is I've run across a lot of people in my career is that they'll have an existing property or a rental property like this couple in California. They have a rental with about $600,000 in equity. And so when I ran the numbers, so the way I run it is I say, okay, if we were to sell it at, this number, let's back out any fees or whatever. And so this is what you would get in your pocket, right? So I'm going to take the net rent, times it by 12 on a monthly basis, divide it into that number, and that's my current cash on cash return on this asset. And a lot of times, if you run that number yourself, you'll find you're in the low single digits, right. 2 to 3%, 4%.
And why do it?
And so you're basically, what they don't realize is they have an asset that's not working efficiently for them.
Yeah, I like it. So for people that want to get started and they have 25 or 50,000, how can people watching the program today talk to you more? I think it's pretty fascinating. A lot of people don't have the time, skill, or expertise to do this. It's a very interesting business. How can people learn more about you?
Our website, sweetcloverlane.com. Just go there. My cell phone's there listed on the site, email as well. Happy to answer any questions. The other thing is there's a lot of information out there. If you want to go do it yourself, just look up YouTube. And you can watch hours of YouTube videos as well. But so what I tell people is you can choose not to work with us, and that's okay. It's not for everybody. But for those that do, just give me a call anytime. I'm fairly flexible in my time, and I'm always happy to answer questions.
Well, you think about starting another side business, and everyone says they want that mailbox money that Spence was talking about, getting these checks to come in every month. There are lots of programs out there for people that only have $100 or $1,000, like Fundrise or Invest with Roots. But you get to that $25, $50, $100,000 or more, maybe it's time to call Spence and figure out if you too can add some extra passive income to your portfolio. I'm Ted Jenkins. This is this episode of The Roadmap. I look forward to seeing you next week right here on America's Small Business Network.
Thanks for watching The Roadmap with Ted Jenkins.